Hello. Hello. Yeah.
Good morning and welcome to Broker Briefing, Australia's premier digital platform for brokers and investors, live streaming video presentations from ASX listed companies. I'm Jane Morgan and thank you for joining me today for our Mining and Resources Investor Webinar. Today we'll be joined by 7 companies: Pilot Energy, American Pacific Borates, Charger Metals, Lithium Power International, Australian Vanadium, Tulla Resources and Future Metals. So up first, we are joined by Brad Lingo, Executive Director and Chairman of Pilot Energy, with the ticker code PGY. Pilot is a company focused on the development of their Australian oil and gas projects. To tell us more, I will hand you over to Brad. Good morning.
Good morning. Thank you, Jane. And it's always a pleasure to bring existing and prospective investors up to speed on the Pilot story through the broker briefing. Pilot is a ASX listed traditional oil and gas company. We have embarked on a new journey as an oil and gas company with a very specific focus on leveraging our position in Western Australia, both in the Midwest and Southwest portions of the Perth Basin, both offshore and onshore, to leverage those assets into the clean energy transition. Next slide, please. So we have a significant position in the Midwest with our holdings in the offshore Perth Basin, principally around the Cliffhead oil field, and then significant onshore holdings in the South Perth Basin, south of Kwinana. And we see that those assets provide us a perfect leverage point to lead the way into the clean energy transition and leverage those assets into the production of both clean electrons and clean molecules in terms of both blue and green hydrogen. Next slide, please. Our current market cap is circa $30 million. We have significant renewable energy and hydrogen projects, as well as carbon management projects currently undergoing feasibility evaluation. We are looking at utility scale renewable energy generation off of the back of our existing oil and gas operations, and to use those clean electrons to also support the production of a significant quantity of both blue and green hydrogen. Next slide, please. So what is our competitive advantage? First and foremost, we have material holdings with recognized world-class natural resources, oil, gas, blue hydrogen, and renewables. From those material holdings, we have ownership in key energy licenses and infrastructure, which provide us the basis to undertake the feasibility studies, as well as to leverage on an accelerated basis into the post-feasibility development of those projects. We see that ability to leverage those existing assets into potential world-class competitive clean energy projects. We're supported by a proven board and experienced management team. And with our recent $8 million capital raising through Bridge Street Capital, we're well capitalized to progress the transition. Next slide, please. So the case for renewables. These slides and these images really tell the entire story that the renewable energy, whether it's solar photovoltaic, offshore wind, onshore wind, they are pushing right to the bottom of the cost curve in comparison to fossil fuel-based sources of electricity. Then when you look at our footprint in Western Australia, in the Midwest region in particular, we have some of the best global offshore wind, as well as some of the best onshore renewable solar resources. And we bring those things together, and it really provides a compelling proposition. Next slide, please. So what is our transition development strategy? One is to use that existing footprint, to use that existing knowledge base, all of that intelligence that's been built up around developing oil and gas projects in the same footprint as these world-class renewable resources, to streamline and accelerate our ability to go from feasibility to permitting. And that's really the stage we're at right now, is going through that feasibility to permitting. And ultimately, on the outcomes of those feasibility studies that we're undertaking in both the Midwest and the Southwest, to go from permitting to partnering and to bring in large-scale operating partners to join us in the development of these renewable energy and hydrogen projects. Next slide, please. So the Midwest Renewable Resource Zone, it really has all the right stuff. It is a premium renewable resource precinct, both onshore and offshore. It has been an area of historical government strategic focus by the WA government, most recently evidenced by the WA government's call for expressions of interest for the Okogie Green Hydrogen Strategic Industrial Area project. There is significant growing renewable energy demand, both from that strategic industrial area at Okogie, but also from BP's proposed green chemicals project. What also makes the area particularly attractive is that there's a lot of established infrastructure. There's a significant integrated Southwest integrated system, electricity transmission system operated by Western Power. There's significant gas pipeline capacity, both with the DBNGP and the Parmelia gas pipelines. And it's also well served by ports, road, and rail, all necessary for the development of these renewable energy and hydrogen projects. It's also an area that there is a clear hydrogen development pathway. First and foremost, through blue hydrogen, where Pilot believes that it has a competitive advantage as having the only asset in the Midwest region of Western Australia that currently has the legislative framework in place to support CCS, which is really an enabling capacity that allows the delivery of blue hydrogen. Next slide, please. So our development plan. We have already formed a joint venture with Triangle Energy to assess the feasibility development of a combined wind and solar and integrated renewables project around the Cliffhead field. We've retained key global feasibility partners in terms of Technip, Genesis, Risk, Green Fuels, and Lautech. Based on those feasibility results, we seek to leverage our existing assets to develop these world-class clean energy projects in the Midwest and Southwest regions. And ultimately to take that to secure key commercial and financial partners to maximize value for Pilot shareholders. Next slide, please. So how are we integrating infrastructure, renewables, and carbon management to deliver a competitive clean energy? Our existing position in the Cliffhead Wind and Solar Project, we've already formed a joint venture with Triangle to look at the ability to leverage that renewable energy capacity through that infrastructure. The Cliffhead facilities provide that potential anchor point offshore for an offshore wind farm. That infrastructure is unique, and it is the only oil and gas infrastructure along the Midwest coast region of Western Australia. That provides us the opportunity to simplify and streamline feasibility and development, as well as to maximize the use of that existing infrastructure, easements, operations, studies, and data to combine that offshore wind and existing operation creates that potential creation of new value. Next slide, please. So starting with that, we looked at the Beatrice offshore wind farm offshore Scotland as really a case study for what we can do at Cliffhead. And it's a perfect example where Beatrice started off as an offshore oil field operation, approximately the same distance as Cliffhead offshore the coast of Western Australia. And in 2007, the owners of that field put in a demonstrator project installing wind turbines connected back to the offshore platforms to both power the platforms, but also to export power to shore. And that was intended to be a 5-year demonstrator project, which after 2 years, they were convinced of the proposition for the full-blown development. And Beatrice is now the largest operating offshore wind farm in Scotland. Next slide, please. So how does that play out for Cliffhead? Is a location for a wind demonstrator project. This is a conceptual drawing of what that project would look like, where we're focused on tying back 3 to 6 wind turbines back to the Cliffhead platform, generating up to 60 megawatts. That platform is already connected back to shore by power supply, and to maximize the utilization of both the platform and that power export capacity to take power back to shore. This is a conceptual development. It is subject to the completion of the feasibility study, completion, joint venture and regulatory approvals, and ASX re-compliance. Next slide, please. We also have, combined with that offshore wind capacity, large-scale onshore solar. That combination in the West Australian Midwest region is, by bringing offshore wind and onshore solar, we deliver high capacity and low cost. This project is also quite advanced. It is also progressing through the feasibility stage, and it could be executed, subject to the feasibility results in the next 24 to 36 months. Next slide, please. There are multiple commercialization pathways for those clean electrons that we're generating. There's power to the grid. There's power for the production of domestic hydrogen. There's power for that hydrogen and electricity to go into green steel, as well as domestic hydrogen for green chemicals. Along with that, we have that capacity to provide carbon management, where we can actually sequester any carbon generated out of any of these industrial processes back at the Cliffhead Reservoir as a very low cost and effective carbon capture and storage project. Next slide, please. So the following slide gives us our key milestones and activities, both at the corporate level, oil and gas and blue hydrogen renewables. And we have quite a busy year to the end of this year, and going into calendar year 2022 is when we will have the early in the year the results of our existing feasibility studies. So then we know exactly how we're going to progress both in time, schedule, cost, and phasing of each of these streams, both in clean electrons and clean molecules. Next slide, please. So Pilot's competitive advantage: material holdings with world-class resources, ownership of key energy licenses and infrastructure, leveraging those existing oil and gas assets into these potential world-class competitive clean energy projects, all backed by a proven and experienced board and management team, and we're well capitalized to progress this transition. Thank you very much.
Thanks for the great presentation, Brad. It's always good to have you on Broker Briefing. We've had a few questions come through, particularly on the sort of offshore rights, but I might jump into a couple here. So what type of operating partner or financial partners is the company currently targeting?
Look, we've been approached by a broad array of partners, from one end of the spectrum, companies that are operators and participants in large-scale renewable energy projects, all the way to partners that are really financial participants. So it's really, I see ultimately a mix of partners that we'll be bringing in. It's actually, as we get more and more into the feasibility, we're getting more and more inquiries. We're not having to seek partners, they're coming out and seeking us.
Thank you. And just another one. So what are the benefits of offshore versus onshore wind?
There's a really good presentation that was prepared by Avisian for the West Australian government as part of the support package for the call for expression of interest for the Oakajee Strategic Industrial Area. And in that presentation, it shows you that the really clear advantage that offshore wind provides you. One, it's a more consistent and reliable resource. Two, that generates much higher capacity factors. And ultimately, offshore rather than onshore, you can use and install much larger wind turbines. So what does that all generate? That generates, one, a more reliable energy source, a less socially obtrusive footprint. If you put it far enough offshore, you can't even see it. And ultimately, that drives the combination of factors drives a lower cost of energy, the LCOE, and ultimately a more reliable resource that is easier to achieve a social license to operate.
Wonderful. Well, that's all we've got time for today, Brad. There were a few other questions that did come through, so I would encourage webinar attendees to reach out via the contact details on the bottom of the ASX releases. But thanks for joining us, Brad.
Thank you very much, Jane. I really appreciate it.
So up next, we have a presentation from American Pacific Borates with the ticker code ABR. ABR is a company developing its Fort Caddy borate mine in California. To tell us more, I will hand you over to the CEO and Managing Director, Henry Tausch. Good morning, Henry.
Thank you, Jane. Hope you can hear me.
Yeah, you're good. Let me bring up your presentation.
Yeah, happy to give everyone an update. I see we have a good audience here. Can you show the presentation? So I tried to hit the highlights of our brief presentation. We only have 10 minutes. So American Pacific Borates is listed at the ASX, and we will be listed at the NASDAQ in a few months under our new name, 5E Advanced Materials Inc. Next slide. This is something, next slide. Yeah, so this is our corporate summary. So we are excited. Our market cap is about $500 million, a little bit more based on the share price. We got about $50 million in the bank. And I'm really excited. If you see at the bottom now, we have a complete new US-based management team in place now to work on our exciting project, which I'll tell you more about. Next slide. So borates so I actually compare it with the WD-40. We use borates and boron in our day-to-day life. You can see some of the applications here. And I'm really excited to, if you see this, it's actually in some of the energy transition and decarbonization applications as well. So everything what Brad was talking about, wind turbines, solar, boron is in there. Next slide. So this is our investment thesis. So in short, we have the only global permitted new source of boron coming to the market, which is very exciting. The boron market is a growing market. You've seen the applications, and it's actually, the growth is accelerated by these mega trends related to clean energy, electric transportation, and food security. The market and supply is constrained, specifically in the US where we are, and I'll tell you more about it later. And we are in California right now, and we're now exciting about the US listing with a world-class US-based management team in place now. Next slide. Now, what is boron, right? And if you look at the picture, I think it explains why it is so scarce. You need to have an inland evaporated water body, and you need to have, volcanoes and a fault line. And you can already imagine that that's not everywhere. So you'll find it in California, in the Mojave Desert. You find it in Turkey, and only in a few other places in the world. And now, as such, it's actually classified by the US and the EU as a strategic element, which is really exciting. We are in the US at the right place there. Now, you can see that key applications again, and so I showed you that on the first slide. Next slide. So this is our project, our Fort Caddy project. We're in between Los Angeles and Las Vegas. So we got all the permits in place. The infrastructure is there. We're close to a pipeline, power. We have an ESG footprint as well that we're working on, and we're working on an integrated project of boron, boric acid, SOP, and advanced boron materials. Next slide. So this is our resource. So we have about 14 megatons hydroboric acid. As you can see, lithium is there as well. And with the current lithium prices and the new extraction technology is actually attractive. So we're looking at that as well. We have a very interesting process, which I'll explain at the next slide. And in terms of timing, next year in 2022, we'll have a small scale operation ready to go. Next slide. So this is our operation. So you see in the middle, a solution mining will inject a low percentage of hydrochloric acid, which is a byproduct of the SOP plant, which you see on the left. So we build a boric acid plant, and what's really exciting is on the right that our focus really is on the boron specialty materials, which is higher value, higher margin, higher pricing, and many applications. Next slide. So this is an interesting slide, and it tells the whole story. So if I start on the left, this is the current market. It's about 4.5 megatons per annum of boric acid equivalent. And you can see that about 70% comes from Turkey, from AEDT, which is a government-owned entity. Rio Tinto in the US has probably another 10-15%. And there's a few others in South America and spread across Asia Pacific. So, and you can see on the left, the existing market is mostly our day-to-day needs, glass, fertilizers, detergents, etc. But what is really, really exciting is on the right. The last couple of years, some new markets have opened up due to energy transition, EVs, energy efficiency, etc. So we expect that in the next 10 years, there will be another 2.5 megatons per annum incremental market opportunities. And if you look at the supply, it's actually constrained. So AEDT has a large resource, and they can still increase their supply. Rio Tinto is actually declining. If you look at their outputs in the last couple of years, they're actually declining, and they are in the US. Our operation for Fort Cady is only about 100 miles away from Rio Tinto. So if you look at that and all these strategic new opportunities for boron in the US, we're at the right place at the right time. So I think the US would like to buy locally for these strategic materials, and having a new source in the US and California is really, really good. Next slide, please. Now, these are milestones. So we're building out our team. We have the US-based executive team in place. We're hiring the second and third level. We're focusing on new boron products, higher value, higher margin. We're optimizing our project to make it more efficient and create more value, and excited to be listed in the US on the NASDAQ, which we expect for early next year. Next slide, and I think this is my final slide. So I want to summarize again our investment thesis. So we are the only permitted new source of boron coming to the market, which is really exciting. We play in a market that is growing, and it will grow even faster because of the decarbonization. Supply is constrained, specifically in the US. And they like to buy American for critical resources. And we're building out a world-class management team. And of course, the US listing on the NASDAQ, which will happen early next year, is exciting as well. This is my presentation, so I'll open it up for any questions, Jane.
Thank you for that, Henry. We've actually had a few questions come through from a Twitter attendee that's a little bit detailed. So let me see if I can pull it together. So is MP Materials a good comparison given their proximity to Fort Caddy? And is the US valuing MP Material? And how is the US valuing MP Materials?
Yeah, MP Materials is probably our closest, well, I would say a competitor, but a peer. They've gone through a similar path as we have. The only difference is they are actually valued a lot more than we are, and they're focusing on advanced products as well, rare earths. So I think it's a very good peer to look at. It also demonstrates that I think we are undervalued. And if you compare MP Materials with us, I think you can calculate what our value should be.
Well, thank you, Henry. That's all we've got time for today. As a shareholder, I'm looking forward to seeing what's happening over the next coming weeks.
Thank you so much, Jane.
Thanks for that. And next up, we have a presentation from Charger Metals with the ticker code CHR. Charger is an exploration company focused on the lithium and battery metals projects in Western Australia and the Northern Territory. To tell us more, I will hand you over to the Managing Director and CEO, David Crook. Good morning, David.
Good morning, Jane. Thanks very much for having us.
Let me bring up your presentation.
Thank you. There we go. Okay, if we could flick through the first couple of slides, please. All right, so as Jane said, Charger Metals has 3 projects. Now, each of these projects were acquired from Lithium Australia. Lithium Australia was one of the first movers, particularly in the lithium space. And so these projects have been filtered over quite a number of years. Lithium Australia has decided to go down the route of processing or downstream processing. And so that enabled us to approach Lithium Australia and say, well, what say we take your assets, you take a good position in Charger, and we as specific explorers can develop these projects. So we have the 3 projects, Bino, which is lithium just out of Darwin, and we'll talk to that shortly. Coates is a nickel sulfide and platinum group element project just outside of Perth. And Lake Johnson is quite a large tenement holding with spodumene identified halfway between Perth and Kalgoorlie. Next. By way of background, I'm a geologist, and I've been a geologist, well, these days it adds up to 40 years, predominantly in Western Australia, and I've been lucky enough to be on a discovery team for quite a number of projects, and my background is both mining, exploration and management, and we have a very good board supporting us. We only listed in July this year, so many of you won't have heard of us. We listed as a 20-cent stock, and there was a rush of blood when we first listed, and we've settled down at between the 40 and 50 cent range. We have a strong institutional shareholding with Gunsynd and Lind. The top 40, the top 50 shareholders have over 66% of the shares, and in fact, in the order of about 45% of our shares are escrowed. So it's still a very tight register, and we have about $5 million in the bank. Next. So let's start just outside of Perth. We're all familiar with the Julimar discovery of Chalice, and we're about 20 k's to the southeast of there. We do have the right rocks. The area was known to have a mafic intrusion out there, which is what attracted us to the area initially. And previous explorers had located nickel, copper, platinum group elements and gold anomalies. So the right-hand side picture shows the target area that we're focusing on. Most recently, we've flown a SkyTem survey, and that interpretation is being completed at the moment, and we hope to announce some positive results over the next week or so. We have about 47 square kilometres, not a large area, but you only need an area that's large enough to find your mine, don't you? So that's plenty for us. Next. To give you an idea of who else is in our area, Charger is the red area. Chalice, a $3 billion odd company, is the blue. They're the main initiators, I guess, of the drive into the Western Yilgarn. but there are a couple of other ones there. And Liontown, that's another company that's just exploded. It's over $3 billion of market capitalization now too. So the point of this is, let's find some nickel sulfides there, and that gives us a really strong leverage play. Next. The Bino project, I suppose it started off as a neurology play. The shaded grey area on the right-hand side is the holding of core lithium, and they're, of course, well into their feasibility study. They've got a resource of over 14 million tonnes, and we happen to be an excision within their holding. The blue dotted lines show a gravity anomaly, and all of the pegmatites tend to be associated with these gravity highs. Most recently, we've been doing soil geochemistry and mapping out there. We certainly have plenty of pegmatites on our ground. We're waiting for the results of 3,000 soil samples that were taken, and our next stage out there is going to be drilling. The wet season, unfortunately, out of Darwin was very early this year, so our fellows that were on the ground there got drowned by rain while they were sampling, and it really means that it's going to be next year before we get drilling out there. But by that stage, we should be well and truly organised. We're also flying some new aeromag. Again, the lockdown in Sydney, which is where the aeroplane is sourced from, has delayed that, but I understand the aeroplane is transiting to Darwin as we speak. So the things to look out for the Bino project, we, for our own geological benefit, will be flying the aeromag. We've got 3,000 soil samples, which will help us map out where these pegmatites are sitting. The geological survey has identified spodumene within our greater tenement perimeter. And so we see this as a very good low risk spodumene lithium play. Next. I should also add, we're only 30 k's out of Darwin there, so from an infrastructure point of view, it's as good as you get. The third project is at Lake Johnson, which is about halfway between Perth and Kalgoorlie. The area is known as the nickel sulfide area, and there have been some gold discoveries in the general area, the greater area, I should say. Lithium Australia discovered spodumene down on the bottom right-hand side at the Medcalf prospect. These are pegmatites that are sticking out of the ground, and we will be drilling them in due course. But we took the view, well, let's see what's really out there. So again, we've got soil sampling crews in the wings ready to go out there to do about a 3,000 sample program down in that area. In the meantime, one of the middle tenements, it's called the Tulla Resources joint venture area. We have done soil sampling there, and we have got a brand new lithium anomaly there that's quite strong. And then towards the top of the area, there's, maybe we'll go to the next slide. I think that explains it better. It shows these areas here. So the photograph on the bottom there shows the outcropping spodumene. The slide above that shows the results of the soil geochemistry, and of course the nice big red and white area at the bottom is a nice new lithium anomaly. And the Mount Day pegmatites, that's quite a big pegmatite field. It's about 12 kilometres long and 2 or 3 kilometres wide. At the moment, they've been identified as being LCT pegmatites, which is the host for spodumene, the preferred mineral. And at the end of the day, we're only about 60 or 70 k's away from Kidman, which is on the next greenstone belt over. And that's one of the biggest lithium operations, or forthcoming operations in Western Australia, certainly. So the next slide, please. Rounding it out, we're a company that was able to acquire de-risked projects from Lithium Australia, that was the first mover in the lithium area. The Coates project is a Julimar look-alike. Let's wait for the SkyTem electromagnetic survey results over the next week or so. Presuming there's a drill target there, we'll be advancing towards drilling that as soon as we possibly can. The Bino project, we're flying our baseline geophysics. We've got our baseline geochemistry pretty much under control now. We'll be looking to drill this early next year, presuming we can get our approvals in place, and we don't see any roadblocks to that. it's a great area and people are drilling there as we speak. In fact, core are drilling in the area, we understand at the moment. And it's very well sited as far as infrastructure goes. And Lake Johnson, it's a large land holding. It's known to have spodumene, and it gives us a chance to really grow the business. So we like to think we're a well-credentialed company. The board is a mixture of exploration geologists, mining geologists, and industry people, stockbrokers and lawyers and things like that. And we're familiar with these commodities. And I think Charger is in a position to offer a really strongly leveraged play to the investor. Thank you very much.
Well, thank you for that, David. We've had quite a few questions come through, so I'll jump into it. So how do you compare your anomalies at codes to neighbours like CHN and CPN?
Certainly our geochemistry was very akin to it. If people are interested, they can follow some of our earlier announcements where we've outlined the tenor of the results. And these were done from explorers for bauxite. We'll have to wait and see what the SkyTem produces, and hopefully that'll be good news in the next within the next week or so. So that will then align us, I guess, whether or not we're in the same paddock as those guys. And then of course it's all determined by drilling. So easy question to ask, hard question to answer.
And just finally, so what should shareholders look forward to over the coming weeks?
Well, let's hope that the SkyTem results can be published fairly soon. That should be followed by geochemistry from Bino, and then it'll just be the grind of exploration, and hopefully it's followed by success.
Wonderful. As a shareholder from IPO, I'm very happy as well, and we look forward to hearing further updates.
Yeah, and it's been quite well supported since we listed. We listed with only about 500 shareholders. Our register now holds over 1,500 shareholders, so the message is getting out there.
Wonderful. Well, thank you for joining us today, and a copy of today's recording will be available online in the coming days.
Thank you very much indeed.
Next up, we have a presentation from Lithium Power International with the ticker code LPI. LPI is a pure play lithium company focused on the development of Chile's next high-grade lithium mine. To tell us more, I will hand you over to Managing Director and CEO, Cristobal Garcia Hudobro. Good afternoon, Cristobal.
How are you, Jane? And thank you for this invitation. It's quite interesting to be able to tell, the current status of LPI, as we have had a very busy year.
Wonderful. Well, let me bring up your presentation.
Thank you. Okay, great. So just to start, Lithium Power it's quite a diversified. We are a lithium developer. We're quite a diversified lithium company in terms of our asset base, with our flagship project, Maricunga project in Chile, based on brine, of course, and also with our exploration assets in WA. Next slide, please. And the other one. Okay. I think this slide is very interesting. Everyone has seen, a lot of graphs of how the demand will grow and how the offer will not be able to match that demand. However, I think this slide is a different way to see it. It shows the last, announcement from each one of the car manufacturers in the world on how they are moving forward towards this, transformation, this electrification of their production. And next slide, please. So based on that, on the figure on the left, it shows, a breakdown on how the demand from each one of these companies and these car manufacturers will grow within the next 10 years. Next slide, please. Okay, so our flagship project, Maricunga project here in Chile, we are located in the third region of Chile, right, within the lithium triangle, where all, the biggest brine projects are located. Next slide. I think this slide summarizes very well what the Maricunga project is today and how we have been significantly de-risking the project during the last 6 years. We started with our first exploration campaigns in 2017. So far, we have drilled more than 8,000 meters at the Maricunga Salar. At the Maricunga Salar, we owned more than 2,500 hectares right in the middle of the Salar. In 2017, we issued our first NI 43 and York standards report, resource report, with more than 2 million tons of LCE measured and indicated. Also, at that time, we decided to start with our pilot evaporation ponds that we operated for more than 30 months. And we issued our first PEA with very interesting economics. By 2018, we decided to move forward straight with the engineering, for which we hired Worley as our main engineering company. And we started working on the definitive feasibility study of the project. And also on the production side, we decided to award the contract for design and, of course, testing of our production process to GEA Messe in Germany, which is probably one of the top 3 suppliers on the brine lithium industry, with which we produced our first samples of lithium carbonate battery grade by the end of 2018. Also, during that year, we started working on the preparation of our environmental impact assessment, our EIA, with the Montgomery Watson, which was acquired after by Stantec. And we submitted our EIA to the Chilean authorities by the end of 2018. By the beginning of 2019, we released our first definitive feasibility study, which was based on 100% of our mining concessions. By then, our exploration went down to only 200 meters depth because it's so rich. We have concentrations over 1,000 ppms of lithium there with very low impurities. So the ratios are very attractive for lithium production. Because of that, we decided to move forward and stop the exploration there. We had more than enough reserves with those resources to support a 20,000 annual tons production project for 20 years. We also, once we released the DFS, we were in the middle of the evaluation and approval process for our environmental permits, and we decided to start our EPC bidding processes, for which we invited just 3 or 4 international engineering companies, of which we received the first round of proposals. And finally, we selected 2 companies, which were Bechtel and a consortium formed by Worley and a Chilean company. We also, by the end of 2019, because part of our concessions are, very new, so we needed a special permit. We decided to partner with the Chilean government for that part of our project. And by the beginning of 2020, and this was just before the COVID started, we received our environmental approval, which is quite a significant milestone here in Chile, as we do have a very strict environmental regulation. And also, once the COVID started, we were in the middle of the process for the financing structuring of the project. And it wasn't that the COVID, closed the market, not at all. But what happens was that there was just, so much uncertainty in terms of the definition of certain numbers that we decided we wanted to be very responsible. We really didn't want to make a mistake on any CapEx estimations. And we decided to slow down things. And because by then we had so much information on the Maricunga Salar, and the project was growing so fast, we decided to, speed up things by moving forward with stack strategy by the end of 2020. And we divided the project into 2 stages. Stage 1, which is based on half of our mining concessions. Even though it's a little bit smaller than the original project, it will have a nameplate capacity of 15,000 annual tons. It's quite an interesting, project. The subsequent stage, or a future stage 2 in the medium term, will have probably a similar size. And by the end of 2020, after we took this decision, we speeded up all the processes. We resumed all the activities. First, with engineering companies, we decided to update our feasibility study, because even though the project is exactly the same in terms of engineering, design, location, layout, etc., it was a little bit slower, a little bit smaller, sorry. And at the same time, we decided to, because we were having people working again at the camp up at site, we decided to increase our resources, going down to 400 meters depth now, which resulted being something, very, very interesting. And we had very positive news last week, with an increase in our resources for this first stage of around 90% from our original resources, measured and indicated, which again will be more than enough as to support our 20 years mine life for this first stage, and also confirm that the deposit is still open at depth. So now we do have a new exploration target down to 550 meters, which let us still, having a very, a potential growth at the Maricunga project. Now, in terms of the engineering, we are expecting to release our updated DFS by the end of this year, during November. Numbers and the economics are very, very attractive for that project, and we will be definitely on the first year of the cash cost in terms of the brine industry, and that, as part of all these processes and activities that we resume, one of the things that we worked back on was with these strategic agreements. And by the end of April this year, we announced the signature of this strategic alliance with Mitsui, which has a wide scope. On the first side, you have on the financing side, Mitsui will act as the off-taker for the project at market value, so no discounts there. And also Mitsui will participate as both a strategic partner on the equity side, and with a part of the debt, for which they are bringing both the JBIC, the Japanese Bank for International Cooperation, and the JOGMEC, those two Japanese bank, with which, along with the recovery on the lithium prices, we are back aiming for at least between 50 to 60% leverage for this project. So it's again quite an interesting structure. And on the other side of the deal with Mitsui, they, by the way, they will also have some financing rights for the subsequent stages, or stage 2 in Maricunga. But also with them, we started working a couple of years ago with Maricunga Brine only, testing and helping them on working with them on the development of this new DLE technology, direct lithium extraction technology, along with one of Mitsui's technological partners. Results have been very good. We were able, by the beginning of this year, to build the pilot plant. It was built at the Kobe port area in Tokyo, and started its operations by the beginning of April this year. Now, discussions have been around dismantling the plant in Tokyo and bringing it back to Chile, to site at Maricunga, to continue with the tests. Of course, this COVID situation and the borders, and because the borders have been closed, have been delaying a little bit that process. But now, situation in Chile, it's quite good. We have more than 85% of the population with the 2 doses of the vaccine. And the authorities just announced that our borders, are going to be open back again without these, long periods of quarantines when you get into the country. So that will let us, to move forward with Mitsui with this testing of this new technology, which we expect to be the base for, what will be a future stage 2 of this project, as the stage 1 will be based on traditional technology and very well proven technology, which is something of also very attractive for all the financial institutions that have been working with us. Like I said, in terms of the economics, we do have, very attractive economics, especially with this increase on, the resources for the stage 1. Now, the interesting part is that for the stage 2, which also comprise like the other half of our mining concessions, exploration still, it's only down to 200 meters. We do have a big exploration target there. And, having proved that the first stage concessions, already delivered this huge and significant increase on the resources, it's, the probability for us to be able to expand our resources further in the near future is also, very certain. And that shows basically the huge potential that the Maricunga project will be able to have in the future. And basically why we expect that this project, once fully built, in the upcoming years, will be at least a 30,000 annual tons project of production. Now, like I said, in terms of cash cost, we will be on the first quartile. One very important thing, the JV company here in Chile, which is controlled by Lithium Power, is the owner of its mining concessions. So basically, we don't have to pay those, special royalties that both SQM and Albemarle, which are by far the main, producers here in South America, are subject to. Next slide, please. So in summary, this is what basically we are, it's all about. Sustainability have been in the center of our design since the beginning, and ESG is one of the, the pillars of this company. From an environmental point of view, we have been reducing the use of water, which is not that much, but we reduce that use of water from the existing established producers in more than 80%, and at least 30% of that, fresh water will be, produced by ourselves through recoveries during our production process. Also, only renewable energy, solar renewable energy, will be used in this project, which we do have a lot at the north of Chile. So from an environmental point of view, we're aiming to be the first carbon neutral lithium brine producer in South America. Now, we do from a social point of view, we do have excellent relationships with indigenous communities. They have been part of the development and the design of this project since day one, and they will be part of the benefits that this project will generate through a very small, but significant sharing on the revenues in the future, which in present value will account for more than $20 million. Now, we do have we already produced 3 years ago our first sample of lithium carbonate, so this is not new for us. Our production process, it has been tested, very in detail. Since our first production, we have been focused only on the optimization of our production process, and today we're reaching purities that range between 99.7 to 99.90 something, which at the end of the day, it gives a wide, range of, product qualities to our off-takers, as not all the companies has the same requirements. Now, this is a project that have only, been developed, and we have only worked with tier 1 engineering companies since day one, which shows how serious we are. All, the supplies needed for this project have been secured years ago: water supply, ports, logistics, energy and electricity. We do have a transmission line built outside. All the roads, are already built. So basically today, Maricunga is a fully permitted project that shows, that this is really one of the most advanced lithium projects in South America. Now, what are we expecting for the upcoming months? We continue working on the financing structuring, which is, of course, one of our priorities today. We have been receiving a lot of approaches from different companies. Regardless, we have this agreement with Mitsui, and it's very clear that everyone wants a piece of this. We're expecting to be able to close all these final agreements during the first half of 2022. And because, like I said, this is a fully permitted project, we're expecting to, be in a position to take the final investment decision immediately after that, and to start the construction by the end of, the first half of 2022. So basically, that will put us into commercial production by the end of 2024, beginning of 2025. Next slide, please.
Oh, Cristobal, I think we've actually run completely over time, which is frustrating.
Okay, sorry. I'm sorry.
Okay, no, you've. Sorry, it was a great presentation, and I know
a lot of things to say about Maricunga.
Yeah, I know it's very late over there in Chile, and I thank you for joining us today. And any webinar attendees who would like to see more from the presentation, it has been lodged on the ASX. But Cristobal, thanks for joining us.
Thank you.
So next up, we have a presentation from Australian Vanadium with the ticker code AVL. AVL is an emerging vanadium producer developing its high-grade Australian vanadium project in Western Australia. To tell us more, I will hand you over to Managing Director, Vincent Olga. Good afternoon, Vincent.
Hi, it's great to be here.
Wonderful. Let me bring up your presentation.
Thank you. Right, fantastic. The first thing that'll strike you about this presentation is that we've used the word greenfield, and that's really an important part of our ongoing strategy here. We've in a unique position at Australian Vanadium with the development of our split process and plant and mine to take advantage of the growing hydrogen sector that'll be developed in the Midwest of Western Australia. And that's really an important part of our decarbonisation strategy internally, but also in building, the second part of that is about building a vanadium industry in Western Australia that is able to not only deal with our deposit, but also deal with deposits, other deposits from inside Western Australia and other deposits going forward from outside. So creating a long life project. So quickly take you through this, give you an idea of who we are and what we do. Thank you. Just the company's been around for a while. We've got a lot of shares on issue, but we've continually worked our way up that trajectory in terms of risk reduction for the project. When the project was first, when I joined the company nearly 7 years ago, it was a resource project. Very little work had been done on the definitive study work. So we spent a lot of that time building up the resource base, identifying very clearly how this would work as a resource project, as a development project, and we've made significant progress over time through doing that. We've maintained a stable register. We have put on a lot of shareholders. We have quite a few shareholders around, but they've been, for the most part, you can see from that split at the bottom, there's a fairly good split. A lot of the shares are held in that top 200. So we're pushing forward. That market cap's been moving up, and we're getting ready to assault the last hurdle of our project life, which is to get this thing into production, which every company really wants to reach that point. The next slide, please. I'll come back to this team, but just so you can put some faces to some names, we have some very experienced people on this team, excluding myself. Cliff Lawrenson has a very, very good technical and corporate record here in Western Australia and around the country. He's on a number of boards at the moment, not the least of which is Paladin, which has done fantastically well, Caspian, which is a great listing, and both Pacific Energy and On-Site Rental. And he's got a very good corporate head on him, a fantastic person to work with, very corporately responsible. So I'm really enjoying working with him. The company's made big strides since he's joined us last year. Daniel Harris in our team and Todd Richardson, our vanadium expert team, with extensive experience in vanadium. It puts us in a unique space globally in terms of the strength of our vanadium team. And we look forward to moving that forward. So I won't come back to the team just now, just know that there are people out there that are really, really focused on getting this thing done and have experience in getting it done. A very important factor. Next slide, please. So just quickly, one slide on the vanadium markets. What is vanadium? It's used primarily in the steel market. It's used to strengthen steel. Its primary market is the Chinese rebar market, but it is used, that 60% of the world market is in China, 40% is in the rest of the world, but it is primarily a steel additive. It's used in aerospace applications. It's used in high strength alloys in both aerospace and defense applications. So it's qualified as a real critical mineral. But of late, the most exciting part of the market is the very small end of the market for vanadium is its use in energy storage. And AVL is a leader in this area, not only in terms of understanding of the commodity, but also in terms of working the application of this material through our own efforts in VSUN Energy, which is a subsidiary of ours, which we're using to grow this vanadium market. The vanadium energy storage market has potential to really take hold of the long duration grid level energy storage market in a big way. And there's just simply not enough high purity vanadium out there to support it right now. It's a market growth area that we think is going to be growing at 20 to 25% over the next 10 to 20 years. And we definitely want to be pushing some of our production into that space. But the steel market is there to support it. And there's a very interesting story around using vanadium in steel, which I'll come to in a minute from an ESG point of view. Next slide, please. So just looking at the project in overview, it's located in just south of Meekatharra in Western Australia. We're on a transportation corridor out to the Port of Geraldton in the Midwest. This is very much a growth area and a big focus area for government as well here in the West. That mining corridor, the way we've set up our project is intentionally unique and strategic. We will mine our ore in Meekatharra and we'll transport a concentrate to a processing plant close to the coast. This gives us a number of strategic advantages over any other player globally in the vanadium space, because we give ourselves not only options with respect to energy usage, such as gas, but also with respect to byproduct sales. The project is fairly large, 200 million tons. Our reserve is smaller, around 32 million tons, but that gives us at a 1.6 million ton mining rate, a 25-year life in the current reserves, with significant opportunity to increase those reserves over time and extend that mine life. So this is a long project that'll be there for a long time, like many of the vanadium projects around the world, of which there are only 3, I might point out, but those are all long life assets that'll be there for a while. At 24 million pounds, we'll produce around 5% of the world's production, which again is the right size. Too much will blow the market, as we see from other commodities. You just got to come in at the right size. Financials for the updated pre-feasibility study, which we completed at the end of last year, were very attractive. The cash flows from the project were very attractive at the time, and we do believe that in the last year, as we've been completing our definitive feasibility study, we really can nail down not only the operating cost, but the capital cost as well, and maximize that. The vanadium price has been in our favor. At the beginning of the year, of this calendar year, it was $5 a pound. It's now nearly $9 a pound. That's a significant move. Just for comparison, you think of the copper price per pound around $4 or $5, you get a good idea that vanadium is worth quite a lot of money in terms of its final product. The focus for the company has always been to reach that bottom cost quartile. If you cannot produce vanadium at under $4 or around $4, you really are going to struggle in the hard times. You'll make good money in the good times, absolutely, but you want to be able to keep your doors open continuously. So again, the innovations and strategic decisions made by AVL in its location of these plants, with the ability to sell its byproduct, gives us some strategic advantages, which we know will keep our doors open for all the time. CapEx, while relatively high on most people's radars, is what can be expected of a project of this type. But there's a lot of opportunity to reduce that, given that the contingency at plus or minus 25% is nearly $100 million. So if we can go to the next slide. So just really the high level points, because I know we've only got a little bit of time here. We've got the right deposit. It's a high quality deposit. It's high grade. And it's robust in terms of size. It's confirmed reserves of 25 years. We've already got downstream processing capability confirmed through a number of grants where we'll be making electrolyte for vanadium batteries and producing one of the highest purity products for sale into the steel markets. We're currently completing the DFS, and we're doing that so that it can be ready for bank financing. We're not messing around with that. It's an arduous process for anyone who's undertaken it, but it has to be done properly, and we're working as hard as we can. It's one of our major priorities to complete that as soon as possible. We have major status from LEED from the federal and the state governments, and it's ideal timing to be doing this because there's a lot of interest around critical minerals, and vanadium not only as a critical mineral for steel and defense, but also as a critical mineral for batteries. The team I've mentioned, top team, best team in the world as far as I'm concerned, for the vanadium experience, best place to be in terms of getting things done. We look at things in the cold light of day. We don't mess around with what is known. We have experience in the team that has seen things happen, and we make sure we move around those and act against them in the design. And another important thing is really taking an action-based approach towards net zero. There's a lot of talk around people moving towards net zero. We know that it's all about everyone collectively moving in this direction, reducing their own scope 1 and scope 2 emissions on the way, and then making sure that the products they produce can also contribute out in the marketplace to the reduction of emissions out there in the world. So on an action base, we can take steps with using green hydrogen. We have a collaboration with a company called ADCO that'll provide us with hydrogen on this plant to reduce our own emissions. And then vanadium, as I mentioned, when used in reinforcement steel, has a major positive impact on carbon reduction globally. So it is a bit of a green steel metal. That information is on our websites and on our social media feeds as to how much that impact is there. And we'll be talking more about that as we get through this. But again, the battery market, by storing and saving renewable energy in a vanadium redox flow battery, you significantly offset a lot of coal-fired energy if you can use it on your own stuff. So this is really an important growth area for us. So just skipping forward, I might skip a few of these really quickly. So just quickly, the project, just again, I've mentioned that the split plant is a strategic decision. It's about making the most of that red line, making the most of that port, and making most of the people who live in the Geraldton area to build a long life project in that area. This is the only way it can be done. And this is the way that AVL has seen the most beneficial long-term opportunity. It's not unusual in the world for people to separate their mine and their processing because of the benefits that lie at a port or near a coastline. So this is not rocket science, it's just practical. And we open up opportunities that we would otherwise really constrain us by being on site. Environmentally, really important as well. The mine is located in a very arid area, and it's also a very remote area. So we're far from gas and far from water. We need to make the most of mitigating all those impacts. Thank you. Next one. I'll just spend 1 second on this. Is just a quick look over a magnetic image. The ore body is a titanium magnetite, so it's a magnetic signal. And you can see just by quick look that we've got a lot of blocks there within that red line. That dark red line is our granted mining lease. That's the subject of the definitive study. That's the thing that we'll be mining for the first 25 years. The lighter red line is where we'll be mining after that. So we've got plenty of upside here, and the ore body is consistent, it's well behaved, and we understand it very, very well. Next slide, please. 2-second look at the layout based on that. Multiple open pits with centralized processing of the concentrate, trucking of the concentrate out towards Geraldton. Thank you. Another quick snapshot. Again, these will be available for people watching the recording. And you can see the open pit on the left. A very detailed and updated crushing, milling, and beneficiation plant from our nearly completed DFS work at the top, and then the processing plant at the bottom down near Malawa. Thanks. So I mentioned the strategic nature of this. Why is it strategic for us for the coastal processing? We're near a gas pipeline. We don't have to build one. That's a big effort and a big cost and a lot of risk associated. We then open ourselves up to lower domestic gas prices so that the processing plant, which is a big gas user, can benefit from that. It's a good percentage of our operating cost, and we need to keep that cost down. We also need to keep the capital cost down of not building a pipeline. We have an opportunity to take part in new regional hydrogen consumption that'll be generated in the area. There's lots of hydrogen plants in the area. The AVL process can use hydrogen not only for power generation, but also in the kiln to reduce its overall carbon footprint. And that is a really big opportunity. So our relationship with ATCO will turn itself into an actual use plan, an actual activity that we're going to use hydrogen for. One of the first real offtakes that'll actually happen in Western Australia for domestically used hydrogen. So putting us in a very good spot. We can sell our iron titanium co-product. When we produce the vanadium from this plant, we basically squeeze it out of the iron titanium concentrate. And what we're left with is a perfectly reasonable iron titanium co-product. If you only make that in the hinterland, you can't sell that material because it's not that valuable. It's valuable enough when you're only 50 kilometers from the coast. So we can make a big margin on that material by being close to the coast. It lets us stay in that lowest cost quartile opportunity. Existing gas rail, stable local non-FIFO workforce for the processing plant, and a long life. Strong government support. So we're really looking forward to taking hold of the strategic location and turning it into what is going to be the beginning of this greenfield Australian vanadium industry. Thanks. Next one. So just the last thing really, where are we now? What is that? What are our main priorities? We've done a lot of work. We finished an updated PFS at the end of last year. We really are producing a BFS that's going to be bank deliverable. So it's not easy in this environment to get it done exactly when people want it done. But what we're doing is building the best ship we can, because the next 6 months are already critical for us. We need to confirm due diligence, get the banking done, get the resources updated, get the new reserves in place, lock in our offtake agreements for iron, titanium, and vanadium, and then continue. We've already engaged the debt advisor and finalized our engagement of the equity advisor. We really are moving forward rapidly at this point, and all of this stuff is happening in conjunction with finalizing the environmental approvals. So from there, we're basically looking forward to the end game, securing our engineering partners, starting to make those calls right now, and getting into the long lead time. Our plan is to have a BFS in the marketplace that is going to be bankable, that people can look at and be comfortable with, because we're going to build this thing and we need people to be able to see and check off every single tick box that it's going to work. And we need to know that it's going to happen. So I'm working with the best partners from an engineering point of view, from a design point of view. It's absolutely critical. Next slide, please. I'm nearly there. So this is a sort of a landscape. I'll pretty much close off on this slide, because this landscape really outlines what we're doing. It's all about that processing plant. It's about bringing in hydrogen, bringing in gas. It's about moving the concentrate down from the mine into the plant, and then taking that vanadium out either selling it through the Port of Fremantle or using it in our own vanadium electrolyte production plant, which we'll be building in the next 6 months in Kwinana. That, excuse me, that rolls into local vanadium battery manufacture, which we'll be doing down there in that region as well. Sales of those, using them and then moving that, growing that market steadily. It's a big market for vanadium consumption. So we have an active plan. We really are starting to get in the groove of delivery now as we reach the end of our bankable study. We really got to get that out and then finish the job, but it must be done properly in this environment. Not the most straightforward thing, I have to admit, given the complexities of the current world, but we are working very furiously to get it done and making strong progress on a number of fronts. So we'll push that out to the market when it's ready, and then we'll start hitting the next phase of delivery. Okay, I'll leave it there. There's a couple of other slides, mainly around the ESG strategy, which I said is an action-based one, but more than happy to take questions on that. And there are some slides on that in a presentation I gave and put up on ASX a few weeks ago in Geraldton. I hope I brought you back in time.
Yes, you did well. Thank you so much for the great presentation. We've had a few questions come through, so I will jump into them. So is there further drilling plan I mean, you've got a great resource already as it is, but is there further drilling plan to further expand the resource or even acquire adjoining nearby projects?
Yeah, good question. Always interested in acquiring nearby projects, always interested in acquiring other projects in the region, because we've got a hub strategy here with the processing plant being based in Malawa. We can always pre-qualify existing deposits. There are a number. Your question is well placed. There's nearly 2 billion tons of vanadium resources in the area, but not all of them qualify as suitable for our plant. So absolutely, in terms of our own ground, we could probably add another 20 or 30 million tons of material there, which at a mining rate of 1.6 million tons a year gives us our own life. So maybe in 50 or so years, we might start looking at other people's projects when we need them. But in the meantime, if something really peachy comes up, we might step in and have a look.
And just finally, Vincent, so what can shareholders look forward to over the coming weeks and months?
Right, so drilling is a good opportunity. We will be putting some drilling work in to upgrade some of our resources to bring them into the reserve. We'll do that after the BFS is done. The BFS itself, obviously, that's getting ready to be done. We're busy crossing the I's, crossing the T's and dotting the I's, I think it is. We are going to be locking in a lot more on the offtake side for the iron, titanium, and the vanadium side. So really starting to push forward to that sort of end game and really starting to add value to the project. So it sits in a box and it's ready to go and be built.
Thank you. Well, thank you for joining us today, Vincent. And a copy of today's recording will be available online at brokerbriefing.com in the coming days. But thanks for joining us.
Thank you.
The next presentation is from Tulla Resources with the ticker code TUL. Tulla is a company focused on developing the historically producing high-grade Norseman Gold project in Western Australia. To tell us more, I will introduce you to the Executive Director, Mark Maloney. Hello, Mark.
Hey, Jane. Thanks for having us. It's great to be here.
Wonderful. Let me bring up your presentation.
Great. Great. Okay. You ready for me to go?
Yep, all yours.
Yeah. Okay. We're Tulla Resources. As Jane said, we're focused on developing the historical producing high-grade Norseman Gold project. We listed earlier this year, and we're really excited to be part of this project and taking it forward. Jane, do you want to go to the first page? So just a quick corporate snapshot. At the moment, our business is 50% interest of the Norseman Gold project. It's located in the Eastern Goldfields, Tier 1 location, and we also believe it's a Tier 1 asset. We've got a DFS out there. The project has an initial 7-year phase, and we expect to commence production in the second half, early second half of calendar 2022. At the moment, we're really focused on recommencing the production and fast tracking the cash flow. We'll continue to drill and expand on the resource and reserve side, which we've been quite successful at to date. And we've also recently started assessing opportunities in iron ore, lithium, and nickel at the project, which we believe will yield significant value in the longer term. Next page, Joan. I think everyone says they have a very experienced board and management team. I also strongly believe that is the case for us. Many years of experience from both our directors and our management. Kevin Maloney, our chairman, has a long history in resource finance, resource investing, and resource operations. He's been chairman and director and founder of many companies in the space, both the mining and mining services space, and has had a very successful track record in executing in that area. Mike Anglin and Andy Greville, our key non-executive directors, very experienced guys, having worked for BHP and Xstrata in senior positions around the world, both very experienced in bringing new operations into production, working in joint ventures, which is key here, and also in business development opportunities. We also have the benefit of their great network and deal flow for opportunities going forward. We've invested heavily in the controls and corporate governance space. That's really important to us, and also heavily on the technical side. Again, that has been a very strong focus for us, and we've recently formed an alliance with Mining Associates, which we think brings an extra overlay of technical support to what we're doing here. Next page, Joan. Just some key highlights. The Norseman project is very high grade, low cost. Average production, we're expecting just over 100,000 ounces a year, ramping up from there. Plenty of exploration upside in the property, which we'll talk about. And we believe since listing with our operating partner and manager Pantoro, we've been really delivering on that and some great examples of it. We have a very well-defined growth strategy for the immediate future. The focus is to double the ore reserve to around 1.2 million ounces, and that is very much on track for the end of 2022 financial year. We talked about the experienced board and management team, and we believe that is a real value add for us here. And I'll just highlight that we believe we have a very robust balance sheet, strong cash position, debt-free, and we also own 7% of our operating partner, which at current prices is worth about $20 million. Next page, Joan. So we're in this joint venture arrangement. We ran an extensive process in 2019 to find the right operating partner for us. We believe our value add or skill set is in identifying assets, developing them, and then bringing in good operators. That we found in Pantoro. The reason we liked Pantoro was that they were a young emerging operating team with very good backgrounds in big companies, but some real successes in their own right starting to emerge. We also liked them over doing a deal with the bigger guys because we believed Norseman would be significant enough to their business to make a difference and get their full attention. We've been in that relationship with them since May 2019 now, and it's been a very good relationship, and we're very happy with how they've been operating and the results that they have delivered. It's all been as expected. As far as the joint venture and how it operates, they are the manager, as I've said. We've got a committee established, which Kevin Maloney is our representative of. The role of the committee is to supervise the manager and make strategic decisions. The overriding principle on how it operates is best for project and focusing on an equitable, reasonable return for both parties. Fairly standard there. Next page, Joan. So a bit more about the Norseman Gold Project. It is a mining camp operation with multiple centres, 6 centres with the initial focus, with 4 really being key that are outlined there. The approvals to commence construction and get going on the project are in place. There's a lot of high quality infrastructure already there, which I'll talk about on the existing page. And I think to really highlight that there's very large endowment of land there, extensive project. And phase 1 has really only looked at less than 30% of the mineral resource areas. So in our view, a lot more to come. Next page, Joan. One of the great attractions to this project for us was the huge amount of existing infrastructure already in place. Really, the only thing we're doing here is putting in place a new processing plant. Construction will commence on that imminently. And it's a 1 million tonne per annum plant, but with easy flexibility to go to 1.5 million tonnes. Accommodation, high quality accommodation is there and ready to go. The airstrip is there. At the moment, workforce will be going through Kalgoorlie, as I understand it, but there is a proposal to resurface that airstrip. Power in place, water, tailings, roads, all in very good condition. So the beauty of this is it obviously has led to a much lower upfront capex to other projects, and also allowed us to get quicker into production. Next page, Joan. Just some highlights from the DFS, which is phase 1 and been within the market for some time now. 600,000 ounces of reserves at reasonably high grade. As I said, really only touched just less than 30% of the mineral resource, and a very low conversion cost there as well, worth taking note of. Again, just to reaffirm that we're on track to double the ore reserve by 30th of June next year, as we've been highlighting to the market. Next page, Joan. Just to give you an idea of the project timeline, as I said, approvals to start construction have been finalised. That will be commencing very soon, with a view that we commence production then in August next year. We get a lot of questions about materials pricing and labour, given the current environment. Most materials for the plant have been purchased with prices locked in, and GR, who are doing the construction for us, are guiding that labour is within expectations too. So we're quite comfortable with the capex estimate that we currently have in the market. Next page, Joan. Just really to highlight, we've talked about phase 1, phase 2, there's some other areas. We've got some good extensions at Scotia, a new area in Green Lantern, and then some other options. But if we go to the next page, Joan. Yeah, we've put out some very good results at Scotia and also in the main field, which again is probably better to find on the next page, Jane, if we go there. Yeah, so for Scotia, you can see there some very good grade results, particularly at low depths. Within that, we've had the Green Lantern discovery with a maiden mineral resource and ore reserve, which we put out last month. We're pretty excited and proud about that, and I think it kind of shows the strength of what we have there and gives you some insight into future opportunities that that will emerge. There's plenty more to come behind that. Next page, Jane. Again, just some more on Green Lantern, which people can have a look at in their own time. Next page, Jane. Yep. Next page. Beyond the success we've had at Scotia and Green Lantern, we've also been doing work on the main field. It's the most prolific mining area at Norseman to date. You know, some successes there, very high grade mineralization accounted again, which you can see there for yourself. So we're quite excited about the opportunities that will emerge there and that we've been seeing from Mainfield too. Next page, Jane. You could probably skip that onto the next one. For those who really want to get into the geology of the area, there's a page there worth looking at. What I'd highlight again is just the extensive land holding and the multiple gold deposits that occur over a strike length of 70 kilometers. There's a lot there to get excited about. Next page, Joan. So, you know, historically, Norseman has produced around 6 million ounces at very high grade. It's in that world-class greenstone belt. Again, tier 1 asset in a tier 1 region. Just to remind you that we see significant exploration upside, and that has been demonstrated through the announcements we've made on Scotia and Green Lantern, and we believe that there's plenty more to come. Again, reminding you of the guidance that will double the reserves by the end of this financial year. Norseman has a very long history, very successful in the early days with Western Mining behind it. It had some issues in recent years, and some of those related to the companies at the time having hedging issues, and others revolving around just not having a systematic approach to mining it, and a fair amount of reserves ahead. What is different here in the approach that our operating partners and ourselves have been taking is a very systematic approach, and making sure that there is a decent life ahead of us in reserves as we move forward. We believe that's a very, very different strategy to what has been employed there in recent years. Next page, Joan. So just to finish off on our overall strategy, obviously the first priority is to bring the Norseman Gold Project back into production, to start getting some cash flow generated. We'll continue to focus on the exploration side and spend money there. We believe that's important, and the money spent so far has yielded exceptional returns. Beyond that, as I highlighted at the beginning of the presentation, we believe there's real opportunities in iron ore, lithium, and nickel, and we're exploring opportunities there involving farm-ins and joint venture partners, looking at potential spin-offs, and there has been parties that have shown real interest in that. And again, Norseman's in a region where there are other companies seeing quite good success in those minerals, particularly lithium and iron ore, well, nickel as well. So that is real. And down the track, the focus will continue to be on gold and battery metals. We like, as I said, identifying assets that are near-term producers, developing them a little, bringing in good operating joint venture partners, and working with them to continue to enhance the value there. I think next page, Joan. Yeah, I think that's it. So over to questions.
Mark, thank you for the great presentation. We've had a few questions come through, particularly on the other commodities that are at Norseman. So I know you did mention it, but do you want to just reiterate what's sort of the strategy for those particular commodities, including iron ore and lithium?
Yeah, I think, just to say that again. So there is iron ore, lithium and nickel there. It is early days, but we're starting to do some more work on those areas, and we are looking to engage with parties in relation to farm-ins and spin-offs. We believe there is real interest there, and it is something we will continue to focus on.
And just finally, Mark, so what can shareholders look forward to over the coming weeks and months?
I think there's a lot to look forward to. As I said, we're about to commence construction, which I think is a big milestone for any project. There's been a lot of drilling going on and will continue to go on, so more announcements around that. Obviously, reserve upgrades, given I've talked about doubling our reserves. Hopefully in the medium term, some good news on the other minerals. And then I think production next year is going to be a key milestone as well.
Wonderful. Well, thank you for joining us today. A copy of today's recording will be available online, and the presentation has been lodged with the ASX. So if you have further questions, please feel free to reach out via the contact details on the bottom of the presentation. But Mark, thank you for joining us.
Thanks. Bye.
And so the next presentation is from Justin Tremaine, Managing Director of Future Metals NL, with the ticker code FME. Today, Justin will be providing an overview of the Panton PGM project in Western Australia, which is one of Australia's largest and highest grade PGM projects. Justin, how are you?
Good, thanks, Jane, and thanks for the time today and the opportunity to present Future and our Panton project here in WA.
Wonderful. Let me bring up your presentation.
Thanks. So Future Metals is a relatively new company, having relisted on the ASX 2 or 3 months ago, which was following the recompliance listing following the acquisition of 100% ownership of this Panton project here in Western Australia and an associated capital raising. So the Panton project is a platinum palladium project in northern Western Australia, and it's in fact the highest grade PGM project in Australia and probably the highest undeveloped PGM project in the world. So very significant with an established JORC compliant resource of over 2 million ounces. If I could just flick through a couple of slides to the overview. So as I said, we have 100% ownership of this project with no encumbrances attached to that in terms of debt or anything like that. There's a JORC resource established of 2.4 million ounces at a grade of 5 grams, which I'll touch on in a moment and run you through that. That resource is completely open at outcrops, so it's from surface, but it's open in all directions, open down dip and along strike. And we've got a 10,000 metre drilling program that we commenced almost immediately upon listing on the ASX. And we're about 3,000 metres into that program at the moment with a significant number of assays in the lab, and look to start reporting results in the coming weeks. There's been some recent metallurgical test work undertaken on this deposit, and there was in fact a breakthrough on the metallurgy that was based on some test work undertaken by the previous owner, Panoramic Resources, in 2015, where they were able to achieve a very high grade PGM concentrate with excellent recoveries through conventional crushing and grinding. The project's located on granted mining leases, which will give us a great time benefit as we move this project forward into development. As I show you on the next slide, the company and I think the merits of the project has attracted a very high caliber board and management team to the company. I joined the company as part of the acquisition of this project and the recompliance onto the ASX, and have significant experience in managing junior companies through through discovery, delineation of resources, feasibility, and ultimately corporate outcomes that create significant shareholder value for shareholders. Also joining me on the board was Alan Mulligan. He's a mining engineer, a South African mining engineer. Previously spent about 15 years with one of the world's biggest PGM producers, Lonmin, in South Africa, and developed and managed several PGM mines in South Africa, a very similar style to the Panton project. Also of note was Mick McMullen has joined as an advisor to the company and shareholder in the company. Most relevantly, Mick ran a company called Stillwater Mining Company, which is one of the biggest PGM producers outside of South Africa, and ran that company through to its takeover by Simbanye, one of the world's biggest PGM producers, which created a lot of value for shareholders. And he obviously has a very strong understanding of the PGM market, and actually has a very strong understanding of this project, given Stillwater was very keen to buy this project, and hence his involvement in Future Metals when we were able to acquire this project. And just flick through to the next slide. Thanks. So just quickly, just a corporate overview. So the company's very modest market capitalisation, have only listed about 2 or 3 months ago on the ASX. The market capitalisation of only just over $60 million, well funded with just over $8 million in the bank, and that's as at today. Flick to the next slide, thanks. So just on the location of the project, it's an ideally located project. You couldn't get a better location for the development of a project. Firstly, it's in Western Australia, which is quite unique for a PGM mine and project. 85% of the world's PGM production currently comes out of South Africa and Russia. So to have a high-grade Tier 1 PGM project in a jurisdiction as Western Australia is very unique, and I think is very strategic corporately for the company going forward. It's well located at just over 1 kilometre off a sealed highway, the Great Northern Highway, which runs up to the Port of Wyndham, where currently Panoramic export their nickel concentrates from. It's had this project, the resource was established back in 2003, about 20 years ago, and there's been no drilling since then. The drilling that we're doing is the first drilling in 20 years. But back in 2003, there was a bankable feasibility study done, hence it's on granted mining leases. And most importantly, there was a lot of environmental work done as part of that BFS, which demonstrated that there was no fatal flaws to developing this project. There was even an exploration decline put in to access the top of the ore body, provide metallurgical test work. So there's been a lot of work done on this project over the last 20, 25 years. If I just flick through to the next slide on the geology. So the mineralisation is, the high-grade mineralisation is associated with chromatite reefs, which outcrop the surface, as I mentioned, and on this slide here, you can see that's been domained into 4 zones, the A, B, C, and D zone. And these wrap around a layered intrusion that's structured as a syncline structure. So essentially the hull of a boat or a keel of a boat. They're quite steeply dipping at surface, but as they come underneath the underside of that syncline, these zones are expected to join together, but that hasn't been drill tested yet, and that's something that we'll be looking to do, and potentially that's where we can get some bonanza grades and widths. But at the moment, the resource is contained within only those A, B, C and D zones, which extends through about 3.5 kilometres of strike, but there's been 12 kilometres of outcropping chromatite reef mapped at surface. So only about 30% of that outcropping chromatite reef is currently contained within that resource, which is already very significant at over 2 million ounces. I'll just flick through to the next slide. Just on the resource, as you'll note here on the resource table, it's a very robust resource with about 90% of the tonnes sitting in the measured and indicated category. So there's been a lot of drilling, about 50,000 metres of drilling has gone into this, been a lot of money spent on the project, albeit that was done 20 years ago and there's been no drilling over the last 20 years. But the resource is very robust, so there's not a lot more infill drilling that we need to do to take this through to a new feasibility study and ultimately development. The drilling that we're doing is looking at expanding the resource, and we see significant scope to do that, as I'll show you. The resource is contained within 2 chromatite reefs, the top reef and the middle reef. And it's important to note that the top reef contains about 80% of the ounces, or about 2 million ounces, at even higher grade of about 6 grams per tonne. One of the opportunities with this project that really is now starting to emerge, and hopefully we'll demonstrate that with drilling results in the coming months, is this resource was really only constrained to the chrome reefs that have been mapped at surface and then drilled. And the mineralisation is contained within those chrome reefs. However, outside of those chrome reefs, there would be about 10 to 30 metres generally of lower grade mineralisation that hasn't been contained in this resource. And so that's potentially another 5 to 10 times the width of mineralisation that we could look to model, albeit at lower grade, but at surface. And that's something that we'll be looking to do. And we're looking to prove that potential with drilling that we're undertaking at the moment. Flick through to the next slide. On the metallurgy, so when a feasibility study was done on this project back in 2003, it involved quite an intensive processing route on site, which came with a lot of capital and operating costs. Subsequent to that, Panoramic Resources acquired this project back in 2011, and they acquired the project to look at developing it and putting the ore through their Savannah nickel flotation plant, which is about 30 kilometres up the road to the north. And so they undertook, whilst no drilling, they undertook a lot of metallurgical test work. And in 2015, had a significant breakthrough with this, and we're able to demonstrate through conventional crushing, grinding, and flotation. Nothing special about it at all. We're able to achieve a very high grade concentrate rate of over 200 grams per tonne. Anything over 100 grams per tonne, is very attractive to offtake parties. So to achieve 270 grams per tonne PGM concentrate with a very low mass pull of about 2.5% and recoveries of over 80% was a significant breakthrough for this project. And that's where we're looking to take this project. We're doing confirmatory and optimisation metallurgical work at the moment to confirm these results, and then looking at ultimately developing this project just through conventional crushing, grinding, and flotation, and no further technical risk or capital risk associated beyond that. So next slide, please. So just I touched on the exploration potential. I think this slide here sums it up here. So the current resource, you can see the outcropping chromatite reef as it's been mapped at surface. The current resource sits within those red zones there, and all the yellow areas is outcropping known mineralised PGM mineralisation at surface that is yet to be drilled and is therefore not included in this resource. And you can see just to the right there, the geochemistry, so that's soil sampling, and we're showing platinum and palladium grades there. And you can see outside of the A, B, C, D zones, there's several targets of known chromatite reef with anomalous geochemistry still to be drilled. So a lot of scope to expand what is already the highest grade deposit in Australia and already is a significant resource of over 2 million ounces. Just the next slide, please. And then also at depth, so there's a high grade plunge component to this, the A and B zone in particular, as you can see here in these hotter colours, is plunging down to the southwest, and that hasn't been followed up with drilling. And you can see some very high grade results there, 8 metres at 4 grams PGM, 6 metres at over 7 grams PGMs, and then there's no further drilling down to plunge on that. So our current 10,000 metre drilling program is not only looking to expand the resource in the top 150 metres, but also to chase some of this high grade at depth where it wraps underneath this incline and potentially have some bonanza grades at depth. So next slide, thanks. So just in summary, I don't have too long to run through it. It is a very significant tier 1 PGM project. We have 100% ownership of that. Established resource, so it's a very advanced project at over 2 million ounces at 5 grams per tonne, but with scope to grow that resource, I think, significantly. And our current drill program, which is a minimum of 10,000 metres, which will run all the way through till Christmas, and then no doubt will be extended beyond that. We're already 3,000 metres into that with a lot of samples in the lab that we'll start to report in the coming weeks. And a very strategic located PGM project, given it is outside of South Africa and Russia and in a tier 1 jurisdiction such as Western Australia. And it's just the next slide quickly, Jane, just to put it in perspective. Here is a slide of all the undeveloped PGM projects around the world, both ASX listed and TSX listed companies. You can see Future Metals Panton project, 100% owned, and just as a standout in terms of grade, that green circle up the top there, there's nothing that comes near it in terms of grade. So that just puts the project in perspective. So I think that's all I've got time for today. Thank you very much, and happy to take any questions.
Justin, great presentation. You actually just answered one of the questions that's just popped through. So just on the drilling program, you did mention it's 10,000 meters and you're already 3,000 meters into that. So I'll jump into some others. So at what depth does the boat hull shape mineralization bottom out? And is there any other nickel copper components associated with the mineralization?
Sure. Yeah. So the ABC zones have been drilled down to about 600 meters depth. The D zone's only been drilled down to about 400 meters of depth. And this is where they're all, the dip is flattening out, and that's where expected the A, B and C zone will come together around that sort of 600 to 800 meters depth. And at those depths, at these grades, that's very economic still at those depths, given it's over 5 grams per tonne. But really our focus at the moment, so we've drilled some deeper holes to test for that deeper mineralisation. And right now we're drilling shallower holes sort of in the top 150 metres, looking at expanding and bulking out the resource that would become ultimately open pittable resource in that top 150 metres. There is potential for other mineralisation such as nickel, and the nickel grades do tend to increase at depth. It's already quite significant. There's actually 30,000 tonnes of nickel contained in this resource, so it's not to be overlooked.
Interesting. And so just with all the drilling that you are doing, what are the labs like? When can shareholders expect assay results coming through?
Yeah, it's all diamond drilling that we're doing, because a lot of the drilling we're doing was for metallurgical samples and need to be diamond core, and some of the deeper holes obviously require diamond drilling. But as I said, we've done about 3,000 metres of drilling at the moment, and majority of that is actually in the labs and been there for a couple of weeks, and we'd hope to start reporting results hopefully in the next 2 or 3 weeks, and then it'll be quite a regular news flow of samples are going off weekly into the laboratory.
Wonderful. It looks like we've got a fair bit of news flow coming up and a good time to be investing. So thank you for joining us today, Justin. I appreciate your time.
Thanks for your time.
And thank you all for joining us today for the Broker Briefing Mining and Resources Investor webinar. Recordings of today's presentations will be available online in the coming days on www.brokerbriefing.com. We look forward to hosting you again soon.